Yeah, so they're type 2A diamonds. So they are nitrogen free, which is very rare. So, the top 1% of diamonds are nitrogen free, and Golconda diamonds are exactly that. As an aside, lab grown diamonds are largely nitrogen free also. So replicate that top 1%.
But they're lead free. They are the vogue right now, right?
Lab grown diamonds, correct. Yeah. So 55% of engagement rings that's last quarter in the US were lab grown. This is against 2% in 2018. So meteoric growth there because
Yeah.
they're 90 to 95% cheaper than the natural equivalent, but chemically, physically, optically identical.
Are they good for the dealers like you in that you make a bigger
I mean, what's going on
margin
West 46th Street? Yeah, really.
Yeah, exactly.
Yeah, so the average price is a lot lower now. So, for example, engagement rings 5 years ago were $6,000. The average engagement ring in the US, that's now $5,000 because people are able to save through lab. So the transition has been pretty exceptional. We're seeing a lot less of the $20,000, $30,000, $40,000 sales because people are migrating to lab.
What do you think about the tariffs, like specifically the tariffs on India and the impact that's going to have on jewelry sales through the rest of this year?
I think if those stick, we have to brace for a lot higher prices in this holiday season. So can I give you an idea of the supply chain? So mining companies are in trouble right now. They're losing money. So De Beers lost 189 million over the first half of 2025. They've halved in revenue over the last 2 years.
Wow.
Or 2.5 years. So they
Cullen
cannot
and mine,
absorb the tariffs. Manufacturers are really focused around inventory turns at low margins, so they also have a difficult time absorbing this type of tariff. When it was 10%, it was still manageable, where between the customer and the manufacturers, there was some give. Right now, 90% of diamonds are manufactured in India, so cut and polished in India. That's not going to change in the near term. So a lot of this price increase will get passed on to the U.S. consumer.
At these levels, do you see potential for U.S. consumers to actually get on a plane, travel to Europe, buy their jewelry there, and bring it back? I mean, is that a possibility?
They could, however, they would need to declare it on the way back and pay duties here.
Sure, they have to declare.
So it's, yeah.
I mean, that's just unbelievable, though. I mean, this could be, look, the fact of the matter, the prices go up so much. I mean, the fact that it would be cheaper to actually get on a plane, go somewhere else and purchase it there. And yeah, I guess you'd have to declare it. But you know what I'm saying there. I mean, that's just unbelievable that the price increase can be that severe.
Yeah, and I'd just like to add that, gold prices are at an all-time high, so there's a double whammy. Gold has doubled over the last couple of years. So you have that and you add an extra 50%. It's
Right.
catastrophic.
New York City is Maiden Lane ages ago, and as you mentioned, 46th and 47th Street in New York is a New York City industry. Is the Amsterdam industry that I recall growing up, the European areas, is it still there even with the price compression?
Yeah, 47th Street is still around, very active on the wholesale side. Now, the challenge is those wholesalers will import diamonds from India and pay that 50% duty. Now, they have to pay that duty up front, and they might sell it in 6 months or a year, but they're holding that cost. So the industry is essentially frozen on the import side right now. Whatever inventory they have, they're certainly selling. But in terms of reorders, it's much harder than it was before.
I haven't been to West 46th Street in a long time, but I hear that it's very, very different. It's not the shops that you used to be able to walk into, the foot traffic. Everything's going on up in 520. Is that right? Is that right? I mean, all those deals are going on upstairs now?
Both. So 47th Street is still very active. You can walk into maybe 500 different stores there. They are transacting like ever before, but then you're seeing a lot more online transactions, which is why 520 and 589 and a lot of these buildings are doing well because they're serving the rest of the U.S. through online.
Are you impressed that I know these buildings by number?
I figure you did.
I have,
mean,
I
you've been there
some,
so many times from
I have
Mississauga.
some friends in the Diamond District. No, but seriously, it's amazing how the business has changed, right? And there's all this talk about these hidden stashes of diamonds in Russia and all this kind of stuff that they can flood the market with, and then all the stuff from the Sahel region of Africa flowing its way to kind of fund Russia's war in Ukraine. Do you see any of that impacting prices, the wholesale prices?
Yeah, so some context. So Russian diamonds are banned from being imported into the U.S., so that's not happening. They're really selling primarily in India, China, and elsewhere in Southeast Asia. That's part one. Part two is I think diamond prices are down 40% over the last 3 years.
Yeah.
So historically, the reason people bought diamonds is there was a financial flex. If you had a 2 to 3 carat diamond, that says something about your socioeconomic status. And it was also an inflation hedge where it outpaces inflation by a couple of percent. Those are no longer the case. So the use case for diamonds is changing a little bit.
Your website is extraordinary. Are people enjoying? I mean, you're going to give me the company story. I get it, but versus the magic of going into a store is a .com thing growing each and every day.
Yeah, so over 20% of jewelry now in the US is sold online, and that's growing very quickly. It's the only segment within jewelry that is really growing that quickly. I think the primary value proposition is it's a lot cheaper than retail stores in general. And second
Right.
is there's a lot of customization and bespoke that can be done online that's very
Yeah.
difficult to do in a store.